The US dollar is one of the best and most reliable indicators for global risk that we have. And contrary to how it sounds and what everyone says, when the dollar is going up, that's a warning sign. And the farther and faster it goes, the more you need to pay attention to it. It's why the dollar goes up that's such a source of confusion. Therefore, what you need to pay attention to. And to clear that right up and leave you with zero doubt, today we'll get to two of the cleanest examples of counterpart currency values to the dollar that you can get. We're talking about India and South Korea, the rupee and the yuan. One is likely to be the world's next rising power, the other an utter economic powerhouse all its own, especially where it comes to trade in the most essential parts of the modern world. And sure enough, both of those currencies just hit new lows against the dollar. For the rupee, after the latest sharp drop, it's another record low. What you might not realize is that India's currency has repeatedly signaled global trouble, including one of the most astounding and profound correlations during the 2008 crisis. The reason is that during times of turmoil, the Eurodollar system imposes a risk premium on other countries and other currencies, a higher cover charge, as I called it in my last video, to participate in the global monetary regime. And in that video, I showed you the euro and the yen, which were very good illustrations of this risk premium. But here in this one, we've got the rupee and the yuan, two that are even better and cleaner examples. And like I said, theirs are both down sharply here in November 2024. It's not Trump, it's not Jay Powell, it's not interest rates, it's risk premium. So let India and South Korea show you all about the risks and risk premiums and conditions from their own unique perspectives. And what they have to say is what you need to pay attention to. And just to start out here, let's go back to 2001, as I did in my recent live stream video, because 2001, there's lots of parallels, including the behavior of the dollar. And in 2001, contrary to popular perceptions, the Federal Reserve was cutting rates, interest rates were going lower, and yet the dollar was screaming higher because the risk premium was becoming very big based on the global economy heading toward the dot-com recession. So we'll start here with DXY as the dollar index before getting into the rupee and the yuan. But in January of 2001, Alan Greenspan began cutting rates aggressively. A series of 5 consecutive 50 basis point rate cuts and then another 25 on top by July of 2001. Don't forget, as I mentioned on the live stream too, we also had the new Bush administration unleashing tax cuts, and there was perceptions that a new administration would be different from the old one and therefore that could possibly be better. Despite what should have been very big positives, from January to July 2001, DXY soared from 108 to 121. Even despite the fact the Fed was lowering interest rates and that market rates were going down, the dollar was surging. Why? Because of the dot-com recession. The dot-com recession was not a U.S. phenomenon. It applied globally. There was a global downturn in 2001. That's why the dollar was screaming higher. It wasn't king dollar. When it goes up, that's the bad news. And the question always is how much is it going up? And is it going up in a way that we need to say, what is it really telling us? And one of those currencies in which the dollar was going up against was India's rupee. The rupee was falling from 2000 through 2002, which was the global dot-com recession era. The dot-com recession impacted really all parts of the world, including India, which had reformed its economy in the 1990s and was becoming one of the biggest beneficiaries of the Eurodollar globalization period. So it was very highly correlated and synchronized to the rest of the global economy. So the rupee is a canary in the coal mine of sorts for these global cycles, and especially the Eurodollar cycles that began to develop more finely starting in 2007 with Eurodollar number 1, or what people call the global financial crisis when it wasn't really a financial crisis. So the rupee's correlation is with global funding conditions, including solidly stunning correlations with these Eurodollar cycles, and one in particular. The rupee had rebounded through the middle 2000s as the global economy recovered because that's the correlation. the dollar's exchange value declines during reflationary or legitimately expanding periods, and it rises when the risk premium rises for economic and monetary reasons. Same with the rupee. It recovered from its 2002 low and began to strengthen again through the middle 2000s as the global economy picked up. But as we started toward subprime mortgages, which wasn't really the issue, dollar shortage that developed in 2007, the rupee would peak on exactly October 9th of 2007, and from there it would plunge through the rest of 2007, 2008, and it wouldn't bottom out until March 9th of 2009. And if you're like me, old enough to remember the 2008 crisis, you'll know immediately what those dates signify. October 9th of 2007 and March 9th of 2009, those are the exact dates the S&P 500 hit its record high and its ultimate crash low. So the rupee corresponded with the crash in the stock market as the ultimate risk-off signal. Now, I'm not saying the rupee and the stock market were connected, but they were reacting to the same things. Not exactly the same in the same way at the same time, but enough that what the rupee was saying, what was pressuring the rupee was the same thing that was pressuring the stock market, which was the Eurodollar retreat, the global economy heading into really bad times with the great not recession. And of course, we need to point out, just like I did in 2001, interest rates were going down at the same time the rupee was. The dollar was going higher. That's the bad news. And it continued right through the 2010s in these various Eurodollar cycles. The rupee rebounded with reflation in 2010 and 2011, though that was rocky in 2010 and 2011, so the rupee was a little bit volatile. It peaked on August 1st of 2011 during that banking crisis, the flare-up in the banking crisis. The Federal Reserve talking about having to bail out the repo market. European banks that were experiencing massive dollar shortages. Suddenly the rupee peaks, and it starts to head down through the rest of 2011 into 2012. And again, interest rates were going lower during this same period because, of course, it's all tied together. Higher global risk premium on countries around the world accessing the dollar system, therefore lower currency exchange values against the dollar, lower interest rates in the U.S. and other places signifying lower growth and inflation expectations and higher demand for safety and liquidity. The one time that you could make a correlation with interest rates was in 2013. While much of the global system was recovering from 2012, there was a reflationary period, and U.S. interest rates were rising in the middle of 2013, not because the Fed was doing something, but because the market was starting to believe that maybe reflation was legitimate recovery this time, so rates went up, and the rupee, like a lot of currencies, plunged in the middle of 2013. But there were also other problems in the world that likely had an impact in that too, including what was going on in China during the summer of Shibor in 2013. There was eventually an emerging market currency crisis, which the rupee was caught up in with too. But the rupee, like a lot of currencies, also rebounded later 2013 and into 2014. And everything that happened in 2013 contributed to what we call Eurodollar number 3, which erupted in 2014. And sure enough, the rupee would peak in May of 2014, just as repo fails were starting to rise, and eventually, a couple months later, oil prices would begin to crash. Demand fell off sharply. China fell into really tough times. Emerging markets were devastated, and the rupee would continue to steadily decline throughout the rest of 2014, 2015, and on into 2016. And again, once more, long-term interest rates were heading lower during that period on lower growth expectations, which are bad for the rupee, higher risk premium in the Eurodollar system. Though I will point out short-term interest rates began to move modestly higher as the Fed transitioned to its rate hiking based on those reflationary conditions. But it was not about interest rates, it's about the risk premium. So we move forward the rest of 2016 into 2017. We have a reflationary period, again, what was called globally synchronized growth. And the rupee would continue to strengthen even though interest rates were rising in the US dollar terms, reflation across the rest of the world, and then it would peak in January of 2018. And then it would accelerate its decline after April of 2018, really April 18th of 2018, leading to the famous op-ed from Urjit Patel, who was the governor of the Reserve Bank of India at the time, where he said, quote, dollar funding has evaporated, basically pegging what was going on with the currency, and really not just the rupee, but all around the world, this higher risk premium leading to more difficult funding conditions. That's what we're really talking about with a risk premium. It means more difficult funding conditions. And here was the Reserve Bank of India's governor saying in the middle of 2018, that's what happened. That was what was happening. And that's what he tied the currency's weakness to, as you should. Of course, he then blamed the Federal Reserve and the Federal Reserve's rate hikes in QT for dollar funding and evaporating. You can't blame him because that's what economists do. Everything's always about the Fed. But essentially, he identified the effect without being able to connect it to the cause. Either way, the rupee continued to fall throughout 2018. We also have to note that India at the time in 2018 was grappling with a shadow banking problem, which also amplified these global pressures, and one reason why the rupee had such a bad performance in the first half of 2018. And though the rupee would rebound in early 2019, it began to tumble all over again when the U.S. Treasury yield curve inverted and rates were going lower in 2019. The Fed was cutting rates as the world started to come to grips with the possibility of a pre-COVID recession. Of course, the rupee was heading lower into 2020. And that brings us to the current period, Eurodollar number 5, the downside of the supply shock. The rupee would peak in May of 2021, which was the peak for reflationary conditions, because up until that point, the world appeared to be heading in the right direction. And while to most people, it continued to move in the right direction, if not too high or too well, the rupee, like the Eurodollar system, began to understand that part of the supply shock would eventually bring about its downfall. Prices were going too high for what the fundamental conditions could actually support, and eventually that would lead to the downside of the supply shock, which the rupee was picking up as a growing dollar risk premium. And it really accelerated lower in January of 2022. Even though rates were rising, we saw the curve inverting really drastically in 2022, and the rupee really plunged in the middle of that year as the global economy was shifting from the supply shock upside to the supply shock downside, and that was the rising risk premium in the rupee in 2022. In October of 22, around October 2022, the Reserve Bank of India began to regularly intervene to slow that depreciation down, and they've had a lot of success in doing so, but they haven't been unable to change the relationship nor to change the trajectory. And what that means is that the Reserve Bank of India is essentially absorbing a lot of that additional risk premium since October of 2022. But even so, rupee continues to go lower, including over the last year since the global bond rally began. So interest rates moving lower in US dollar terms and around the rest of the world too, since October of 2023. And the rupee keeps going down anyway. And you can see there's a pretty good correlation from last summer. August of 2023, the rupee made a pretty convincing next stage moving downward. At the same time, of course, we see other dollar funding signals like swap spreads start to really tell us that trouble was brewing there as well. So it's a corroborated signal. It's a historically validated signal that tells us there is growing risk perceived by the Eurodollar system and also acted upon in this growing and rising risk premium. That's what the rising dollar is. And this despite the fact that India's economy has performed way better than its peers over the last several years. The concern here, what's really driving the risk premium, is that much of that economic boom has been purchased too much on artificial means and temporary means. The government has made massive amounts of investments that some of them don't look like they're paying off nearly much as had been hoped and expected. There's also been, importantly, a shadow lending boom in the last couple of years as well, a lot like 2018. And more recently, some shadow lenders are beginning to report concerning results and a deterioration in their quality metrics. So what the Eurodollar risk premium is, and the lower rupee against the US dollar exchange value, what that tells us is that the risk premium is rising for India for a couple of reasons. First of all, maybe their economy isn't as sustainable and strong as it appears to a lot of people, and therefore India's at risk of suffering a setback, similar to 2018, including potentially banking and credit irregularities on top, and that the global economic conditions can exacerbate those problems. So you combine those two together, and it's one reason why, as the global economy moves further and further along the downside swing of the supply shock, the more there are risks building up outside of India as well as potentially inside India. And it's the same thing for South Korea's won, which South Korea is far more directly tied to China, but it isn't necessarily just about China because the Chinese economy goes where the global economy is heading anyway. So South Korea's won, just like the rupee, corresponds with this global risk premium with a heavy emphasis on the Chinese part of the system. Again, it's not interest rates, it's not the Fed, it wasn't Biden, it wasn't Trump before them, it wasn't the incoming Trump administration. It's about how the global economy and the Chinese economy connect together. So you see a rebound in the middle of 2020 in the Korean won with the supply shock upside beginning to develop. But the won started to turn around in January of 2021, sensing trouble, especially related to China. The supply shock recovery and all the price pressures on everything else were becoming too much to ignore, too much to just consider and blindly believe that these were good times that were going to last forever. And also remember, the direct impact on Korea itself, the supply shock means the country needs more dollars in order to buy things and import goods and services into the country anyway. So by September and October of 2022, you've got both of these currencies, China's yuan as well as Korea's won, that were absolutely plunging. Dollar shortage, huge risk premium. But both of them bottomed out and rebounded in late 2022 as China reopening became more and more of a possibility. So there was the optimism that maybe China's reopening would allow the global economy to breathe a little bit and potentially actually start to recover itself. But it didn't last very long. Though the dollar risk premium receded quite a lot, allowing the won and the yuan to rebound and the yen too, it didn't last very long because the Eurodollar system quickly realized China's reopening wasn't going to be the panacea that most people had hoped it would be, including those in authority in China. So essentially you had a return back rising risk premium ever since around January and February of 2023. The won has kept to its trend, and that trend is rising Eurodollar risk premium tied to the realization of the downside of the supply shock and what that was and still is going to do to the global economy and continue to impact China, therefore South Korea. So we have the dollar that is threatening to break out of its recent range, which grabs our attention for all of these various reasons. Not because of the Fed, not because of interest rates, not because of Trump, because what history shows when the dollar does so. DXY is up. The euro is down. The yen is down. The rupee's at a record low. South Korea's won is at a multi-year low. Higher dollar equals nothing good. But it's about conditions in the real economy and how the monetary system reacts to those conditions as well as affects them. These are more warning signs that the downside of the supply shock is not done. In fact, there's more to it, and there really might be a next stage coming. Those risks obviously apply to China, and there's growing worries it can't stimulate its way out of this mess. To Europe, it's facing worse recession than the one it's been in for 2 years. To the US, the U.S. continues to face more than just persistent recession questions. To South Korea, which tells us about China and Asia, and to India, where Eurodollar risk premiums are applied in the most consistent fashion of all. That's why we really want to pay attention to India. As I said throughout this video, it's not Jay Powell, it's not interest rates, it's not Trump. It's this Eurodollar risk premium. And as the risk premium appears to be going up yet again, that's all about the downside of the supply shock. It's going up because the downside to the supply shock is not done. If you want to go back and look at that video about the yen and the euro, that's the one I've got linked below. Eurodollar risk premiums in both of those. As always, thank you very much for joining me. Huge thank you, Eurodollar University members and subscribers. And until next time, take care.